Hello again, everyone, and welcome back to the Daily Gold Podcast. Today I'm speaking with David Morgan. He is the editor and publisher of the Morgan Report, which you can find at themorganreport.com and also silver-investor.com. Dave, how are you today? Thanks for taking the time.
It's a pleasure. I'm doing well. Thank you.
Okay, first question. This is kind of a long question, so bear with me, Dave, and also bear with me, audience. But Dave, as you know, the precious metals have been forming rounded bottoming patterns over the past year, with the stocks leading. Now, nevertheless, some pundits believe the precious metals are heading lower because they haven't made higher highs yet and therefore haven't shifted into bull market mode. Now, in your opinion, do precious metals need to rebound strongly out of their bottoms for a bottom to be in place? Or, historically, is it possible to have these types of rounded bottoms?
Oh, it's very possible to have a rounded bottom historically. And the rebound isn't going to be, in my view, that strong. In other words, it's going to be kind of a stealth bull market. First of all, the stocks are leading, which are a very, very strong and good indicator in a bull market. So since the silver stocks are doing well, the gold stocks are doing well, and the metals are still languishing, we've got a strong indication that it's not going to be too much longer before you start seeing strength. But what I mean by the type of pattern that I expect, it's going to be edging higher. You know, silver will make it back up to, say, 24. Or, we're at the 20s now, so hit 22 and people will maybe go short or say, that's it, I'm going to wait, it's getting back to 20 before I buy. And then they look at it again, it's at 23, and it's going to pull back, and then it's at 24. And once we achieve what I call the level of the major breakdown, which was 26 in silver and 1550 in gold, rough numbers, once those are accomplished, and I believe those will both be achieved by the end of this year, then we have made a round trip, meaning the major support levels that held for a very long time for both gold and silver are now being tested to the upside. So as you know, you do a lot of technical work. What was once resistance, if it's penetrated, becomes support and vice versa. So it was supported at 26, supported at 1550. That level now, since it's been penetrated to the downside and been under that level for a very long time, both the metals, then that becomes resistance. So once we get through that and maintain above those two levels, then we could start to see a little more fireworks, meaning we might see a little more zest to the markets. But I think they're going to grind up into those levels. It's going to do not totally stealthy. Those that follow the market daily, like you and I, will be watching it and seeing it and wondering, is it going to finally penetrate that level, move up? And they will. But it's certainly been one of those patterns, and I think I coined a phrase where it scares you out or wears you out. We're definitely in the wearing out phase. I'm worn out, and I've been in this market for decades, but nonetheless, we will move higher.
Now, Dave, let me follow up on that. So do you place more importance on hitting those targets, 1,500 and 26, or what's your thought on, with respect to gold and the mining stocks? I'll just leave silver out, but that they've kind of been, more so than silver, they've been forming this rounded bottom. And if gold gets above 1,400 on a weekly basis, and if the stocks break above the last high, that to me would seem to be an important technical breakout. Would you place importance on that, or for you is it more about getting back to that breakdown point like you discussed?
No, I think to have confirmation is what you suggest. If you've got a new high in the stocks and 1,400 level, then you've got like an 85% probability that we're going higher. So if you want to, take that in, digest what I just said, that's very, very important. As far as the levels that I talked about, that's more psychological, because what will happen is, even if it's not conscious psychology, it'll be a subconscious psychology. And I don't want to get too esoteric here, but I've been in these markets a long time. And because that was where the psychological breakdown occurred, not just those levels for numbers, but this is where a lot of bulls were kind of hanging on, saying, okay, look, it's held 26, it's held 26, it's held 26, it's held 1550, it's held 1550, it's held 1550, and it didn't. It broke through on massive paper selling. I mean, if you can, you probably know, I'm sure you know, there's a lot of listeners that may or may not. And the psychology's been broken. It's like, oh, I don't want anything to do with silver. I hate gold. I wish I never heard of David Morgan. I think Jordan's a such and such, and James Turkus is so and so, and on it goes, because they bought at higher levels and they're sitting on a paper loss, and there's lots of negativity in the market. So it's more of a psychological thing for me than technical, although technical is important, and it's certainly, looking at the chart, you can make a huge argument of what I'm making. But that's not my point. My point is what you said is, if you want to be guaranteed that you're going to see higher prices, what you outlined is more important than what I'm outlining. What I'm outlining is once we get to those levels, then I will throw up my arms in the air and say, hey, the bull market is ready to begin again. But until we get to those levels, it's still suspect.
Okay, I just thought of a couple more follow-ups. First, let me get your quick thoughts on the COT, because there's a lot of people out there who try and analyze this, myself included, but I don't purport to be a real expert on it. Some people they throw up the chart whenever they see the commercials increase their commercials increase their short positions. They just kind of automatically think that's bearish and going to knock the price down. And we have seen since the recent bottom, I think several months ago or a couple months ago, we have seen a pretty sharp increase, you could say, in speculative long positions in both gold and silver. Some people seem to be really concerned by that. I mean, how do you view that, and what should we think about that?
Great question. I'll give you a long answer because it requires one. If you go back before the gold and silver ETFs, the COT was so important that I wrote a little booklet that you could almost trade silver to the nickel. It was that important as far as determining price levels or which way the market was going to move. But with the advent of the ETFs and a lot more robust markets in the over-the-counter markets, this commitment of traders is still important, but it's not nearly as important as it once was. Second thing to bear in mind is what the term open interest, which I know you know, but some of the listeners may not, and you can Google it. But the open interest used to be somewhere around the 100,000 level, and now it's like in the 160 or so for silver. And what that means is there's more market participants, but it also skews the market. There's more people involved. When the commercials are very net short, it usually portends that the market will go lower. So that is, and I don't know what the correlation is, if it's 80 or 90%. It's not 100%. But right now, I don't weight it as much as I used to. It is important. And there was a good article by Gene Arsenberg, and I do talk to Gene from time to time. We don't agree on everything. I don't agree with anybody on everything anyway. That's what makes life interesting. But he made a good case that the people on the other side of the trade, the specs that usually lose, might be the smart money this time. And of course, Butler talks about the Raptors that get in there and kind of scalp the market, and they're specs also. So there are ways to beat the commercials. Is it important? Yes. Does it mean we're going lower? That's the real question. The answer is I don't know. The answer that I think is that no, I think we may get somewhat lower, but not significantly lower. And I think you're going to see lessening of the open interest, which means that people are wrapping up their positions, and that silver may get down and test as low as 19, although I don't think it'll get that low. And you'll see the open interest to unravel quite a bit. In other words, there'll be a lot less open interest. And this is what you look for. I mean, I don't have time to go through the whole thing. I know you understand all this, but the listeners, no one's taking a profit until a position is closed. So if the open interest is growing, all it is you're just increasing your bets on the table, but no one is showing their cards yet. I mean, that's the best analogy I can give you. Once the all the bets are in, and now it's time. Okay, show your cards. Then you see who's won and who's lost. And most of the time the commercials win, but not every time. So as accurately as I can say, I'm a bit suspect. I think that the commercials may have overdone it this time. They're so used to rigging the game. But you know what? A game can only be rigged for so long. Is this the time? I don't know. But at some point it will be. So I'm a little more bullish based on other factors than the COT this time, Jordan. And thanks for asking, because it's important for people to understand that there is a point in time where the physical market, or maybe some smart specs, are able to force the commercials into a position that they don't want to be in. And once they have to cover, believe me, you're going to see a pretty good move to the upside.
And just a follow up on your answer, Dave. I mean, if you look at, I think, more so with respect to gold, and just even in the last couple of years, I mean, it seems that the specs have been on the right side of the market. I mean, they were shorting gold all the way down. It seems like, you know, not to say that one side is right all the time, but I mean, in the last 2 or 3 years, someone who followed that religiously really could have been fooled.
Correct. Yeah. Yeah, there's a lot to, to understand the markets. No one gets it right 100%. I mean, the way I trade is very different from almost anybody. And there's one book I know of, and I forget the name of it to give credit, but I do channel analysis, but different than most people do. And I don't have time to go into it, but I actually make the market tell me when to get in. And it has to do with volume and price at certain levels. And once those levels are breached, then I am long. And then, of course, I have a stop because I'm very disciplined. The only way to beat the commodities market, because you're going pro to pro, it's like playing in the NFL instead of playing in high school. So if you're going to be in that market, you better have the pads, you better have the thing, and you better be NFL quality. If you're not, don't be in the game. But there are levels, and I was in at 21 and out 30-cent loss. Recently, I thought we'd get a rally stronger than we did. But anyway, yes, there's a lot of things that go on in these markets that cause them to move around the paper price. And again, discipline is the key. I don't advocate trading for everybody. I am an investor primarily. I also trade these markets because I learned early on that these markets are so volatile. If you're not able to trade at least part of your position, and I do, then you're missing. You're leaving a lot of money on the table.
Right. Okay, I just have one or two more questions. Now, first, you were talking about the stocks leading the metals earlier, and with respect to silver, it's really been the laggard in the whole precious metals complex. Yet the silver stocks are showing a ton of relative strength, in my opinion. I checked SIL and SILJ yesterday, and if I remember correctly, I think they might be at an 18-month high against silver. Do you think the silver stocks are, I mean, right here, are they correct in the way they are acting, or perhaps are they a little too overbought with respect to silver? What are your thoughts on all of that?
Well, my thoughts are to be determined, so I'm not going to say that I know, because I don't. It's kind of a point of inflection where we need to see silver show some strength, or maybe a massive amount of selling, and it doesn't budge to the low side, which was kind of what we indicated on the COT discussion, because it's either right or it's wrong, and I really don't know. I being bullish, I think it's going to it suggests strongly that silver is going to either not necessarily move up, but not move down, or down much. But no, it's portending a pretty good move in the silver market back into a level of, significantly higher. No, percentage-wise higher, yes. I mean, if you go from today while we're doing the interview of like 20 and you get to 22, that's a 10% move in a market, and silver can do that in a matter of, 10 trading sessions. So I think that's where we're at. I think it is suggesting strongly that we are going to move higher, but are we, is this all there is? No, there's going to be more. And I think you'll see once silver moves that maybe the stocks will stay put. So it kind of ebbs and flows, but no, silver is really needs to do something here rather quickly. If it does not, then I think you'll see the stocks will start to pull back.
Just to follow up on that, Dave, it kind of reminds me of the 2000-2001 bottom, where you had the stocks bottom, and then a couple months later you had gold bottom, and then in 2001, didn't silver bottom? I mean, it was almost a full year after the stocks bottomed. Even the silver. Correct me if I'm wrong, but didn't the silver stocks, the big ones at the time, I mean, didn't they bottom like almost a year before silver itself?
Yes, and we, gold bottomed well before silver in this bull market, and I mean, it's on the record, so you can't say, well, David, you're making this up or you're putting the starting line now where you want it. I'm on record. In fact, one of the best analysts that did Elliott Wave for one of the biggest brokers in New York called me and said, how in the heck did you get that call right? But I said that it would break out September 2003, and that's the beginning of the bull market in silver. Gold's bull market started earlier, but you asked a direct question, I'll answer the direct question. Yes, you're correct. And yes, that's similar to what we're seeing now. And silver stocks are leading. And I think, the most important thing for the listeners, if I can just give myself my own question, is the bull market over? And the answer is no. I mean, the only way I'm convinced that this bull market is over is that the monetary system has been reformed or they've made things better. And I do not see that happening. So the bull market isn't over. The problem is, like I said earlier, it's the, scare you out or wear you out. People are just ground down. But if you're in the stocks, you're probably feeling pretty good right now. We know what our model portfolio has done for our readers. And certainly we're not sitting here with our chests all puffed out because it's been a rough 3 years. But, our zinc stock is up over 50%. We called the zinc situation. I called the platinum palladium situation. We're doing our best. And if you're a resource investor, that's part of your portfolio the way we view it. And, we'll put our record and our integrity up against anybody's. And I think we've got a long, long ways to go. I truly still believe that the next run in the precious metals markets, and I don't see the big run coming probably till the end of 2015 into 2016 or 17, is going to go on the financial record books. I truly believe that.
Dave, I understand you're working on a new book on silver. Can you tell the listeners a couple things, when that might be out, how and where they can buy it, and what are you trying to cover in this book, and what do you hope to achieve with it?
Thank you. Shooting for the Silver Summit, which is, I think, the 23rd of October this year. I'm trying to have the rough draft done when I speak at the Money Show in the 21st of August. The accomplishment that I wish to achieve is that it's a book that you can pick up that's like economic theory, the problem with paper money, the problem with central banking system globally in cahoots with the political system globally, what that does to the people at large. So it's basically not about silver only. It's primarily an economic study using logic to show people exactly why we're in the predicament we're in and why we can't get out of it, and why silver is important in that view. And of course, we discuss gold as well. So it's kind of an overview that if you're pretty good intellect, average or beyond, and you could pick this book up not knowing hardly anything about economics, you could read this whole book cover to cover and you have a great understanding of what happened, why it happened, where we are, and what's going to happen in the future. That's my goal. So it's more than just, this silver stock and that and the other, all about silver. It's primarily laying a huge foundation for what is going on in the economic financial system globally and why the importance of the metals.
Now, Dave, before I let you go, please tell our listeners how they can follow you and your work, how they can subscribe to your newsletter.
Great. A lot of free information. The YouTube channel is Silver Guru. The Twitter feed is at SilverGuru22. Go to the website, themorganreport.com. You can get in our free e-alert. That's once a week. We don't barrage you with stuff every day. And then if you're a serious precious metals or resource investor, and we do more than just silver, we look at all the resources, you can have 3 levels of service. They're explained on the right-hand side. There's a basic service, which is like $10 a month. I mean, it's like, 2 Starbucks coffees a month, or probably less than that. And then there's a basic plus service where you get all the videos I do, and you get to look over my shoulder on the kind of trades that I put on. And the last is an advanced service called the Mastermind, and that's for really high-end net worth people. Primarily it's fund managers that are on that like to see what I'm doing and special situations that we bring to their attention from time to time. In fact, we just brought one to the attention of our mastermind clients that has to do with the e-waste. There's about 200 million ounces of silver in the recycling world now. And if you go back to 1980, the total mining supply was about 350 million ounces. So that shows you how much is being recycled these days, and a lot of that is electronic waste. And this company that's a startup is a very high risk, very high reward situation that we brought to the attention of that group.
All right, Dave, thanks so much for taking the time today. I really appreciate it, and I and my listeners enjoy your insight, and I look forward to having you back soon.
My pleasure, Jordan, and I always appreciate you because you're very technically oriented and you really drill me down, and I like that. I like a good discussion. I appreciate your time as well. Thank you.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.